Hello students, I would like to welcome you all to this video. Today I'm going to solve a paper in front of you. The paper that I have selected is the specimen paper, that paper 2 accounting. The code is 7707 for the examination from 2020. The time for this paper is 1 hour and 45 minutes, and there will be no choice and all questions that needs to be attempted, and the total mark for this paper is 100, as we can see here. So let's start solving this paper. So the first question that we have in this paper, the requirement for this question is to make cash book. And the question says that Shahid is a trader and he maintains the full set of accounting records including 3-column cash book. So there are some opening balances, as we can see the cash $50 on 1st August 2017, and we have a bank overdraft balance as well, 7,150. And there are some transactions that we need to record in the cash book. So let's start solving the transactions and entering these transactions into the cash book. So here's the format that we have for cash book in the question. So as per the opening balance, we have cash opening balance, that is $50. So we'll start by writing the date, that is 1st August 2017. I will write down balance BD of cash $50 on the debit side because it's our asset, and we do have a bank overdraft balance on the same date. So bank overdraft is our liability, so we'll write down the balance BD on the credit side in the bank column, that is 7,150. So the next transaction that we have, it says that a check received in July for $365 from EN Supplies was dishonored by the bank. So once we receive the check, we make the debit in the bank column, and now it is going to be dishonored. So mean our bank balance needs to be reduced with the amount of 362 with the same person name that we received the check from, because this will make this receivable again. So the date will be 9th of August. Students can also write down the dishonored check under the bracket. So the next entry we have is on 18th of August. It says that we paid a check for fuel for private motor vehicle. So private motor vehicles mean it's drawings. So check means the bank balance is going to be reduced by $54, and we'll write these with drawings. The date of this transaction will be on 18th of August. The next transaction that we have is received check from Mariam to settle her debt of $520 less 2.5% cash discount. So in this scenario, we receive a check, and this is on 24th of August. from Miriam. Write down the Miriam in the details column, and the amount that we receive is the amount after deducting cash discount. So I will calculate the cash discount by multiplying 520 into 2.5 divided by 100. So that will be $13. The $13 is the amount of discount that we allow to this person, Miriam, and the balance that I got is deducting this from 520. So that will be 507. So the next entry that we have is paid $400 by check. This includes $365 for office equipment, and the balance was for the repair to existing office equipment. So because we made the payment, so we'll record on a credit side. So that will be on 27th of August. The first entry that will come up with the office equipment account. And the amount will be $365. Now the check was for $400, and the rest of the amount was for the repairs of existing office equipment. So we'll record this with the repair account, mean repairs expense account. So the amount that we will record, that will be 400 less 365 is $35. So that we will record here. The next entry that we have is cash sales, and that is on 30th of August. So we'll record this with sales, and we got the money by cash, and that will be $3,224. The last entry we have of this question is paid all the remaining cash into the bank except 100. That means we have to deposit all the amount of money into the business bank account, and we will keep only $100 with us. So let's start finding out how much cash balance do we have right now. So we have 3,224 and plus $50 in the opening balance, and we did not make any cash payment. That means we currently have $3,274. So we'll keep $100 with us, which means we have to take away 100 from this balance, and this remaining balance 3,174, we need to deposit this amount of money into the business bank account. That means we will debit the bank account with the amount of 3,174, and we will record this because of cash deposited. The date for this transaction will be 31st of August. The second element, as we know that our cash balance is going to be down, so we have to credit the cash as well with 3,174. On this side we will record this because of bank account, because we deposit this amount of money into the bank same date. This entry we call contra entry. It has effect on both sides, means debit and credit side. So let's balance this cash book. So the balancing the cash book we have to balance the discount columns first. We don't do balance carried down and balance brought down of the discount columns, which means we only write down the total here and total here. The next thing is we have to balance the cash account. As we have calculated before, we have $3,274 here because this side has a bigger value. So we'll write down the total and then we'll move the total to the other side, the same amount, and we will take away the numbers, the totals that we have. So the total figure that we have on top of this is 3,174, and here we have the balance remaining in our cash account, that is $100. We'll mention this with balance carried down and we'll write down the date of the end of the month. We'll move this balance as balance brought down, so we'll write down $100 in cash and we'll write down balance brought down. The date will be 1st of September, the next month. Now let's balance the bank account. As we can see, we have the bigger value here. So let's make a total of this side on the calculator. So we have 7,150 plus 362 plus 54 plus 365 plus 35. So the total that we have is $7,966. We'll transfer this balance to the other side, $7,966, and we'll deduct the balances that we have here. So we will going to take away 507 and 3174, which gives us the balance of 4285. So we'll write this balance on the top of the smaller side, 4285, and we'll mention this with the balance carried down. The date will be 31st of August. It's important to write down the dates because it will give us marks, at least 1 mark in the final exams. So we'll transfer this as balance brought down here and we'll write the amount under the bank column, 4285. So we are done with our question here, which means we have a cash balance and we have an overdraft balance in the bank column. So after completing the part A of question 1, we'll move on to the next part, that is part B. The requirement of part B is state the business document and the book of prime entry Shahid would use to record the following transactions which appear on the statement of account. So here we have a statement of affair that is incomplete, means we have some figures, those are not mentioned. So they ask us to give the answer of these two transactions, the transactions that happened on August 9 and August 13. So let's have a look on August 9, the Shahid, he made some sales. We can notice that we have a balance due 520, which means we're supposed to receive some amount of money from our customer. The statement of account is the document that is issued by the supplier to its customers, means we're supposed to receive this amount of money from Mariam. So if there is an increase in this balance, which means we are going to debit it. It means we made some sales, credit sales. So that document that we use to record the sales, credit sales, is called sales invoice. And we record the sales invoice in the book of prime entry. We named it sales daybook. There are some books, there are some writers, they mention with the sales journal. So either we can write down sales daybook or sales journal. The both are correct answers. So the next transaction that we have is returns. That means it's the sales returns. So the document that we use to record the sales return transaction is called credit note. And we record sales returns into the sales returns daybook or journal. So let's move on. This part contains 4 marks, so 1 mark for each transaction. So moving on to the next requirement we have in our Cambridge is that we have to make Miriam's T account, which means we have to look into the statement of account and we need to make an account of Shahid. So the account that is going to be made by the Miriam. So here the thing is important. Before we have to solve this question, we have to decide that who we are, from which perspective we are going to make this account. So we are Miriam. I usually tell my students that the name of the account that we are going to make, as mentioned here, is Shahid account, which means we are not Shahid. So we have to make this account from the perspective of Miriam. So if we are Miriam and we are customer of Shahid, which means we have a liability and we have to pay some amount of money to the Shahid. So let me arrange this document in a form so you can see the figures while I'm solving this for you guys. So here we have the opening balance of 520. If you guys can see here, so that's the very first balance that we have in this document. So because we are Miriam, so we are supposed to pay this amount of money to Shahid. So our opening balance will come up on a credit side with balance brought down, and the amount will be 520. The date that we'll have here is 1st of August 2017. So the next entry that we have is the goods that was purchased by Miriam from Shahid. So we are going to record this by debiting the purchases account and crediting the Shahid account, which means we're supposed to make payment in future to Shahid because of this purchases. So we'll enter this amount with the amount of 340 as mentioned in the statement of account, and the date will be 9th of August. So the next transaction that we have here is the returns which made by Mariam to Shahid, which means it's a purchase returns. So purchase returns we record on a debit side, that reduces our liability. So we'll enter purchase returns here and we'll write down the amount of the returns as mentioned in the statement of account is $24 with the date of 13th of August 2017. The next entry that we have is the payment along with discount. So the payment along with discount will be recorded on the debit side because bank is going to be credited and Shahid account is going to be debited. That will be the entry. So the bank will come up with an amount of 507 and the discount receive will be recorded here because this is the discount that we receive from our supplier while making the payment. So the discount amount that we receive is 13. This entry will be recorded on 24th of August. Now we have entered all the transactions. So the last balance of this account to find the closing and opening balance for the next accounting period. So to balance this account, we have to identify the bigger side. As we can see that this side has a bigger value. So we'll make a total of this side. That gives us a balance of 520 plus 340 means $860. So we will transfer this to the smaller side and we will deduct this smaller balances from this total. That will be 24 minus 507 minus 13, which gives us a balance of 316. So write this balance 316 on the smaller side and we will mention this balance with the balance carried down means CD. On the other hand side, we write down balance BD, which means balance brought down. So that this entry will be done on 31st of August, which means the last day of the month, and the balance BD will come up on the next month opening day, which means the 1st of September. So we have done our question number 1. Let's start question number 2. So the question number 2 we have here is on the Yasmin. So it's a factory, means manufacturing account. So we have some information here that she provided the following information. It says that she opened a garment factory on 1st May 2016 and she provided the following information. On 1st May 2016, the cost of factory machinery, the cost of office furniture and equipment, and the cost of tools. And for the year ended, we have some information. And moving on to the downwards, we do have the closing inventories of raw material, work in progress, and finished goods. We do have some additional information here. So in the additional information, it says no additional non-current assets were purchased during the year. The factory machinery is to be depreciated at 20% per annum on cost. The office furniture and equipment is to be depreciated 15% per annum on cost. The tools are to be revalued at the end of each financial year. So the requirement that we have for this question is we have to prepare the manufacturing account. To prepare the manufacturing account, we always start with the direct raw material. So the direct material we have here. We always start with the opening inventory. So in this question, the opening inventory of raw material is not provided because the Yasmin, it's just started the manufacturing business, so there will be no opening inventory. So we have the purchases of raw material that given in the question 30,100. So the next thing, we are going to less the closing inventory of raw material. So the closing inventory of raw material is 3150. So we'll deduct this and we will end up with the number 26,950. That will be the value of direct material that we have. So moving on, we are going to write down the direct wages. So the direct wages or labor cost we have in this question is, we have some wages for factory operatives, so that is 31,500, and we also have some accrual balance of wages. So I'm going to write down here 31,500. So we know that accrual is add on into this. So accrual means there are some wages that we have not paid yet, so we will add these two numbers. So we'll end up with a number of 31,500 plus 800 is 32,300. So after writing down this, I'll see if there is any direct expenses. We do not have any direct expenses into this question. We normally have royalties, license fee, patent fee. So if we don't have that, so we'll just add these two direct costs. So we'll end up with the number of 59250. So that will be our prime cost. So the next thing, what do we have to do? We have to write down all other factory expenses. So we'll start with the factory expenses we have. So we have the factory supervisors, that's the wages of factory supervisors. The amount of factory supervisors are 11860. So the next expense we have is factory general expenses. In the manufacturing account, we record all the expenses that relates to the factory. The expenses that relates to the office we're not going to record here. We'll record those in income statement. So the factory general expenses 3240 will be recorded here. The next we have rates, factory rates. So we'll record factory rates as well. So the amount that we have for factory rates is 4,500. So next we have depreciation. So the depreciation here we are going to calculate for the machinery. So the depreciation of factory machinery will be, it says that depreciation is to be calculated on 20% per annum on costs. So we know that the cost that we have is 35,000. It's given in the question. So we are going to calculate the 20% of 35,000. That will give us the total of 7,000. We'll show your working here like 35,000 into 20%. So the next thing that we need to record is the depreciation of tools, because the tools also uses in the factory. So the depreciation of tools is calculated as given in the question, is based on the revaluation method. So it's given in the question that we have a value at the end of financial year is 830. So at the start we got the 1000, and at the end we have the value of 830. So that means we have to deduct this and we will end up with the balance of 170. That will be the reduction of in the value of tools. So that will be our liability over depreciation. So moving on, we have recorded all the factory related expenses here. So we'll add all of these and we'll make the total. So that we have 11,860 plus 3240 plus 4500 plus 7,000 plus 170. That will give me the figure of 26,770. Now I'll add these two numbers, the prime cost and this number, to get the total manufacturing cost. So it's 59250. So it's given me the total of 86,020. So now I'm going to make the adjustment of the work in progress inventory. We usually add the opening work in progress and we less the closing work in progress. So in this question we do not have any opening work in progress. So opening inventory of work in progress will be 0. So there will be less the closing inventory of work in progress. So the closing inventory that we have in the question is 2820. So I'll take away 2820 from this cost. So I'll end up with 0. Let me just use the calculator. 2820. So I'll end up with 83,200. That will be the cost of production. Moving on to the next part that we have here, it says the Yasmin is hoping to decrease her cost of production in the future, and she thinks that if she spend a further 25,000 on factory machinery, she will be able to reduce the cost of direct labor by 1/3. So she is planning to spend some money on the factory machinery, 25,000. So she will be able to reduce the cost of direct material by 1/3, mean the cost of labor is going to be reduced. So we have to give two advantages and two disadvantages of this advice. The first advantage we can write down will be obviously the reduction in the labor cost ultimately reduces the production cost. So the next we can write down that the factory machinery, the new machinery can increase the quality of the product. So it may increase the quality of the product. So you can write any other options that comes into your mind while writing down these advantages and disadvantages. So now moving on to the disadvantages. So we can write down the disadvantages can be the first of all, obviously if we are going to invest 25,000, so we have to maybe get some newer investment. So spending on new machinery will require new investment, or bank loan sometimes we have to get. So the cost of finance will be an expense. The next disadvantage that we can write down is the cost of depreciation. The cost of depreciation of new machinery. We can also write down the reaction from the labor side if there is a trade union involved. So that can be also a disadvantage. So because we are saving the labor cost by reducing our number of employees. So the last one we should give the advice. So you can say that Yasmin should go for new machinery. So the other way around, we can write down that she should not go for this machinery. It's totally acceptable. So let's move on to the next part that we have in this question. It says to calculate the cost of sales for the year ended 31st April 2007. So as we know that we do not have opening inventory, we usually write down the opening inventory of finished goods. So we do not have any opening inventory of finished goods. So after that we write down the purchases of finished goods that's given in the question. So the amount of finished goods that we purchased is 15,700. So next we write down the cost of production that we have calculated in the first part. So we add this here, the cost of production. that is 83,200, and we'll deduct from this the clothing inventory of raw material, the clothing inventory of finished goods. So less closing inventory of finished goods that's given in the question is 6,800. So we'll deduct this and we will end up with the number of, that will be our cost of sales figure. So let's calculate. It's 15,700 plus 83,200. So deducting 6,800 will give me the total of 92,100. So that will be the answer. So the next part, we have to calculate the gross profit. As we know that the gross profit will be calculated like revenue that we have in the question is 113,640. So we have revenue 113,640, and the cost of sale that we have calculated on top, so less cost of sales, that is 92,100. So once we will deduct this, we will end up with gross profit. So the numbers will be like 113,640 minus 92,100 will give me 21,540. So that will be the answer of this section. The Yasmin could increase the percentage of gross profit to revenue. So we know that gross profit to revenue ratio. So the main thing is purchase goods on lower price. That ultimately gives us lower cost of sales figure, which means it gives us higher amount of gross profit. So that is the end of our question number 2. So in the next question, question number 3, they ask us to make some rent and rate account, which means it's an accrual and prepayment question. So let's start making this account. So we have made a combined account. So on 1st January 2016, 3 months rates 480 was outstanding, which means it's our liability, and liability comes on credit side, and we'll write down balance BD on the credit side with the amount of 480. The date will be 1st January 2016. The next thing is 4-month insurance totaling 700 was prepaid, which means it's our asset. So we'll record this amount on a debit side with balance brought down. The date will be again 1st of January 2016. Moving on, it says during the year ended 31st December 2016, the following payments were made by the check. So these are the payments. So the entry that we make to record the payment is bank credit and rates or insurance debit. So as we have a combined account, so I'll write down here with the bank 2560. This amount was for the rates, and the second entry of the bank with 2,400, and this amount was for the insurance. The date that we'll write down is on 31st of December, 31st of December, because this is the total number that we made the payment. Now the next thing it says, from this months we'll calculate if there is any prepaid. So as we can see that this amount of money that we have paid is for the period of up to 31st of January 2017, which is 1 month later than our closing year. Our year end is on 31st of December, so it's move on to 31st of January. So we have to calculate the 1 month figure. So we'll do 2560 divided by the relevant months that we have is 16, and we'll multiply this by 1 because we need to calculate only 1 month's payment. So that will be 160. Which means this is our prepaid. So we'll write down, we know that prepaid balance comes up on a debit side, and the closing balance of prepaid account will come up over here. Balance CD, so 160. So we'll make the lines of this total figures, and we'll transfer this here as well as balance brought down 160, and this was for the rates. So we'll write down here that will be the end of the year 31st December, and that will be the 1st January 2017. So move on. Now we are going to calculate the insurance that we paid up to the 31st of April 2017, which means it is also prepaid. So here in this scenario we have prepaid for January, February, March and April for 4 months. So we'll calculate the 4 months figure by dividing 2400 by 12 by multiplying this with 4. So I'll get my answer, the 800. So that is also a prepaid. So I'll write another balance 800. That will be my balance carried down, and that will also become my balance brought down. And this balance is specially for insurance. So I'll write down insurance in the bracket to just mention. So now I am going to calculate, I'm going to close this account. So for that I have to see that this side has a bigger value. So let's make a total of the bigger side. That gives us 700 plus 2560 plus 2400, which means 5660. So I'm going to transfer this balance to the other side, and I will deduct all these three numbers. 480, 800 minus 160, that give me the balancing figure of 4220. I will transfer this number to the income statement on the expense side. That will be on the date of 31st of December. So we are done with our part A. So let's move on to the part B. It asks that we have to mention that which section of statement of financial position the balance of rate and insurance will appear. So as we know that the balance comes on a debit side, that was a prepaid balance, which means it will be mentioned on the other receivable section in the current assets. So you guys can write down current assets and other receivables on the other way around, mean current assets first and then other receivable later. The reason we paid 1 month rates and 4 month insurance in advance, and the prepaid will be recorded as our asset. That can be an answer, or you can write down with your own words. So moving on to the next part, we have here, they ask us to make a rent receivable account. It's again with the accrual prepayment income account. So we have data here on 1st October 2016. Be careful with the date, that we know that our year end is on 31st of December. So it's just few months before, means October, November, December. It's only 3 months before our year end date. Decided to sublet part of her premises at an annual rent of 4,800. On that date, she received a check for 2 months rent. So we do not have any opening balance, which means 1st January of 2016 balance. So we're not going to write down any balance BD while answering this portion. Now we receive a check for 2 months rent, which means we will debit the bank account and credit the rent receivable account. So we'll mention this on the credit side with the bank. That will be 2 months rent. So I'm going to calculate 2 months rent. So that will be 4,800 divided by 12. That will give me a 1 month rent. Multiplying by 2 will give me a 2 months rent. So that will be 800. So I received this amount of money on 1st of October 2016. Now the year end came, means the 31st December 2016 is there. So I have to balance this off. So this amount of money that I receive is only for the 2 months. That will cover the period of October and November, which means the December month is due, that we have not received the rent for this month. So it is an accrued income. So accrual income is our asset. So as we know that asset balance CD comes on a credit side and the balance BD will always comes on a debit side. We'll calculate the 1 month rent. That will be again 4,800 divided by 12. So we'll get 1 month rent, that is 400. So we'll write down 400 here and we'll write down 400 here. So the date will be again 31st of December, 1st January 2017. So now we are going to balance off this account. So this side has a bigger value. So write down 1200. So we'll move this number here and there is nothing to be deducted. So we'll write down 1200 and we'll transfer this to the income statement as other income. So that will also be done on 31st of December 2016. So that will be the answer of this section. Moving on to the next section, they asked us to mention which section, we are going to record this in the statement of financial position. Again, this balance brought down comes upon a current asset section under the other receivables heading. The reason, because we did not receive the rent for the month of December, which means it's an accrual income, and we record accrual income as an asset. Moving on to the next section, there is another theoretical portion. It says that we need advice again whether or not she should start paying her rates in this way. Support your answer with one advantage or one disadvantage. So Amla has been given the opportunity to pay rates monthly by direct debit. So the first advantage will be bank will pay her rates automatically, and the second disadvantage will be the bank will charge for the direct debit facility. The bank may charge for this facility. Now the advice you guys can write down that the Amla should go with direct debit opportunity. So you guys can write down any other advantage or disadvantage that comes up into your mind. So that will be the question number 3. So here we have question number 4 of this paper, which shows that we have some transactions, we have some errors. That means the total of his trial balance on 31st March 2017 did not agree. The difference was a shortage on debit side of 495, which means that there is a suspense account balance, that is the difference in the trial balance that was mentioned in the 495 on the debit side. So we have the following errors: error number 1, 2, 3, 4, 5, 6 and 7. So we have to look into these errors and we have to make a suspense account. So let's start solving this question. So the first error was the total of page of the purchases account 3842 had been carried forward as 3824, which means the amount that was written in the purchases account was less by mistaken. So we need to find out the difference. So the difference will be 3842 less 3824, which gives us a number of 18. So we are going to make purchases debit, means we are going to increase our purchases and we are going to credit the suspense account. So because we are crediting the suspense account while doing the correction entry, it means we will record on a credit side with the purchases, and that was 18, the difference that we have calculated. So all of these errors will be corrected on 31st of March. That will be the year end date 2017. So all the transaction will be done with the same date. So let's move on to the second error that we have here in the question. It says that a check received from DEC Limited 150 had been credited to the account of DDE Limited. So once we receive a check, we usually do bank debit and DEC credit, but instead of DEC credit, we credited DDE account. So to correct this error, we will debit the DDE account and we will credit the DEC account, which means there will be no suspense account involved in this transaction. So moving on to the next error number 3, we have here, it says the balance on the petty cash book 100 had been omitted from the trial balance, which means we forgot to record trial balance. We forgot to record petty cash book balance $100 in trial balance. So once we're recording that, so we'll debit the petty cash book in the trial balance and we'll credit the suspense account while correcting this error. So again, this error will be recorded on the credit side with the petty cash book. So the amount was $100 and the date will be again 31st of March. Here I forgot to record the balance that we have mentioned here. It's the debit balance, that is the difference in the trial balance. So we'll write down the difference in the trial balance on the debit side of suspense account, like here. Difference in trial balance. The amount was $495. Again, the date will be 31st March 2017. So moving on to the error number 4, which states that repairs to a motor vehicle 283 had been debited to the motor vehicle account. So there was a repair, so we supposed to debit the repair account, but mistakenly we have debited the motor vehicle account. So to correct this error, we will credit the motor vehicle account and we will debit the repairs account, which means no suspense account involved. So moving on to the next error, we have purchase of fixtures 2000 on credit from OS supplies had been debited to the OS supplies and credited to the fixture account, which means we have done a complete reversal error, that once we purchase the fixture, we supposed to debit fixture account and credit the OS supplies account, but we have debited OS supplies account and credited the fixture account. To correct this error, again there will be no suspense account involved, because we will debit fixture and we will credit OS supplies account with the double amount while correcting this error. So the next error we do have is the total of the discount allowed column in the cash book 250 had been credited to the discount receive account in the ledger. So we have to correct this error by debiting discount receive account that we have done credited by mistaken. So we have to debit discount receive account and we have to debit again discount allowed account, because discount allowed is our expense and expense goes on the debit side. So there are two debits, once discount allowed and one discount received, with the amount of 250 each. So now we will credit the suspense account. So the entry that we will record here in this T account, discount receive, because of discount receive 250, and because of discount allowed 250. Again the date will be 31st of March. The next error that we have here is error number 7. It shows that the total of the analysis column for stationery in the petty cash book 67 has not been transferred to the stationery account in the ledger. So in the stationery account we will record stationery on a debit side and we will credit the suspense account again. So while recording this error, we will debit the stationery account and we will credit the suspense account. So here again we'll write down the stationery here. $67. So after entering all the errors here, now we are going to balance this suspense account. So the stationery that will be recorded on 31st March again. So now while we are balancing this account, so we'll make the total of the both sides. The both side balance should be equals once all the errors will be corrected. In this scenario we can see that this side has a bigger value, so we'll make a total of this side. Which gives us a balance of 685. So I'll transfer this 685 over here, and here we have a difference, which means there are some errors that still needs to be corrected, and the errors will have a value of 190. So for the time being we can mention this with balance carried down or balance brought down 190. So let's move on to the next section of this question. In the next section they ask us to write 2 entries to correct the errors that we have that do not require suspense account while correcting, as we have seen some errors that will not going to be recorded in the suspense account. So we have error number 2 on top of the list, which says that a check received from DEC Limited had been credited to the DDE Limited account. So we'll correct this error. We'll do DDE Limited account debit, and the account that we supposed to credit DEC Limited account on the credit side with the amount of 150 and 150. Be careful, they ask us to give narratives, so I'm going to explain this, that correction entry to record DEC Limited on credit side of account. There are other statements that we can use while narrating a double entry, so this can be one of them. So the second error that I have selected is the next error that we have is motor repair vehicle balance that we mistakenly entered onto the motor vehicle account. So to correct that error, we will debit repairs account and we will credit the motor vehicle account that we mistakenly debited with the amount of 283. Again, the narrative, you can write down a correction entry to record repairs instead of motor vehicle account. This can be the narrative. So moving on to the next section, they ask us to identify which errors that was done in error 2. So in error 2, we forgot or we mistakenly transfer the amount to another account, which means that is an error of commission. Moving on to the next section, here we have to tell that some of the errors they may affect our profits and some of the errors they will not going to affect our profit. So the errors that are going to change anything in our income statement will affects our profits, and if there is an error that is going to be changed in our assets, liabilities and capital, which means they are not going to affect our income statement and ultimately our profit. So the error number 1 they have done for us. So let's move on to the error number 2. Again, that was the change of the name of the account, mean the change of the customer's account that do not comes into the income statement, means will not going to affect our profits. Well, error number 3 is our petty cash book balance that was omitted. Again, petty cash book balance is our asset, so it will not going to affect our profits. So the 4th error was the repair of motor vehicle. Yes, because repair comes into the income statement, so it will going to decrease our profit after correcting it, the error. Next error, we have error number 5, which means the fixture. So we credited the fixture account, so fixture also is an our asset, so it will goes to the SOFP, statement of financial position, will not going to affect our profit. So the error number 6, we have discount allowed and discount received. They both are our income and expenses, so they will come up into the income statement, ultimately affect our profit. The last error we have the stationery. Stationery is our expense and expense goes to the income statement, which means that it will affect our profit. So that's the end of question number 4. Let's move on to the question number 5 and the last question of this paper. So we have some company account question that shows us that a K Limited provided the following information. Its issued share capital consists of 180,000 ordinary shares of $0.5 each, and we have some opening balances of general reserves and retained earnings. We have some profit and other adjustments, and what do we have to do? We have to make the statement of changes in equity. So let's start solving this by writing down the opening balances. So to calculate the ordinary share capital, what do we have to do? We have to multiply 180,000 number of shares with the amount of each share, that is 0.5, that gives us the figure of 90,000. So I'm going to write down the 90,000 in the opening capital balance, and we do have opening balance of general reserves and retained earnings, so I will write down simply general reserves 4,000, and we have retained earnings of 5,500. I can also make the total of this number, so we have 90,000 plus 4,000 plus 5,000, and 500 gives me the total of 99,500. So the next thing that I have to do is I have to write down the profit for the year. So I will write down here profit for the year ended, and that was 9,000. So it will comes into the retained earnings columns, and it will increase my retained earnings, and it will add up into the total as well. The next thing is 2,000 of this was transferred to the general reserves. So means the next thing that I have to do is transfer to general reserves, which means I have to deduct 2,000 from retained earnings, and I have to give this balance to the general reserves, which will not going to affect my total balance, because this plus minus will set off each other. So the next thing I have is an interim dividend of 4,500 was paid during the year. So interim dividend I will write down here, that will be deducted from the retained earnings. As there is no year-end dividends, so we're not going to do any adjustments for that. So 4,500 will be deducted from retained earnings and from the total column as well. So the next step is just to balance off this statement of changes in equity. So the capital balance will be 90,000, general reserves balance will be 6,000. So this balance will be retained earning balance will be 5,500 plus 9,000 minus 2,000 minus 4,500. That gives me the total of 8,000. The next thing is I have to balance this total column, so it's 99,500 plus 9,000 minus 4,500. That gives me the total of 104,000. We can also double check by adding these three numbers to see if we get the 104,000 balance. So let's have a look on that by adding 90,000 plus 6,000 plus 8,000. That gives me the total number. So it's a double check, and that give me a confirmation that my adjustments are perfectly fine. So let's move on to the next section. We have here some data of year ended 31st September 2017, which shows some non-current asset, bank overdraft, inventory, trade receivable, trade payable, and other payables. So what do they ask? They ask us to complete the following table, which means they ask us to calculate the current ratio, liquid asset test ratio, and return on capital employed. So let's start with the current ratio. The formula of the current ratio is current assets divided by current liabilities. So here from the top of that, I do have my assets, I do have my liabilities, but this one is a non-current asset, so we don't need that right now. So we have inventory, that is my current assets. We have trade receivable, that is also my asset. We have other payable, that is my liability, trade payables, and other payables. So the total of this assets, we do have a number of 5100 plus 8500, and that gives me a total of 13,600. And while calculating the current liabilities, I do have a balance of three liabilities. Those are 6,100 plus 4,300 plus 1,400 gives me a total of 11,800. So I'm going to write down this 11,800. Now I'm going to divide these two numbers to calculate the answer. 13,600 divided by 11,800 and gives me a number of 1.15. So it's asked me to give the answer in two decimal places, so that would be 1.15. So 1.15 ratio 1 we can mention like this, which means that our current assets are more than our current liabilities by 1.15. So the next ratio they ask us to calculate is liquid asset test ratio, which means the formula of that ratio is now we are not going to write down the current closing liabilities. So the current assets without closing inventory means less closing inventory, and divide this by current liabilities. So from the top of this question we can again collect the data. Now we have only one asset that is going to be recorded, trade receivables, and we'll record all the liabilities. So the trade receivables only is 8,500. So either you can just take away from this total number of assets, current assets, or you can only have 8,500. So I'm going to use only 8,500 here. So 8,500 divided by the total current liabilities that we have calculated earlier, 11,800. So the answer will be 8,500 divided by 11,800. The answer is 0.72. So we can mention 0.72 ratio 1, which means my current assets without inventory is just 0.2 for every single amount of current liability. So the next ratio is an important ratio, and that is return on capital employed. So in this ratio, the formula of this ratio is we need profit before interest and that needs to be divided by capital employed. And the figure will be multiplied by 100 to get the answer in percentage. Now, in the previous section of this question, I have the data here of profit for the year. As there is no non-current liability that was mentioned neither here or nor in the second part of the question. So we have profit for the year and we have capital employed, mean the equity section total. Normally the capital employed contains two numbers, which means that we have to add non-current liabilities into the equity section. So the profit here is 9,000 and we have the equity section number is 104,000 that we have calculated in the previous section. So we'll multiply this by 100 to get my answer into the percentage. So now the answer will be 9,000 divided by 104,000 multiplied by 100. That gives me the answer of 8.65%. So let's move on to the next section of this question. It's a theoretical portion and they ask us to give some advice. So here again, they says that director wishes to improve the liquidity and profitability of the business. The finance director has suggested that the business should reduce the amount of inventory by 50%. Now we have to think that if we are going to reduce the inventory, what will happen? So we have to look into these two sections, like they want to improve the liquidity and they want to improve the profitability. As we do not record uh, liquidity, we do not record closing inventory in our liquid asset test ratio, which means current assets minus closing inventory. So I don't think that there will be any difference in our liquidity. Yes, we can mention here that by reducing the inventory, we may have to purchase less inventory that gives us some cash or cash equivalent reserves. Means the amount that we invested in purchasing the inventory, so now we are going to purchase less inventory. That will give us privilege to save that amount of money, or we can have this amount of money in terms of cash, or that can also ultimately help us to reduce help us to reduce the bank overdraft that currently we have. Now another one more point that we need, like if we are going to reduce the closing inventory, which means the closing inventory will be less deducted in cost of sales section of income statement. That may lead us to higher cost of sales, which means lower profits. Or we can mention, if we are going to reduce the inventory, that it can be difficult to respond if there is any unexpected demand from customer. Or there is a risk that we will be out of stock. Risk of out of stock will be higher because of less inventory. So at the end you can give your advice, means K Limited should reduce the closing inventory to get better results. That can be a simple answer. So the next part of this question is, the K Limited allow its credit customers a period of 60 days to pay their accounts. For the year ended 30th September 2017, the trade receivable turnover was 69 days. State whether K Limited would satisfy with trade receivable turnover. So, it should not be satisfied. Because it gives higher days. So let's move on to the last section of this paper. It says that the K Limited is allowed 30 days in which to pay its accounts of its credit suppliers. For the year ended 30th September 2017, and its trade payables turnover is 52 days. Discuss how the trade payables turnover of 52 days may affect K Limited. So this days mean that K Limited took 52 days to pay its suppliers. This will destroy or damage the relationship with its suppliers, and or you can mention here that the company means K Limited will not get any cash discounts because of late payment, or the company may face some interest on overdue payment balance. So that can be a simple answer to get 3 marks, or any other points can award you 3 marks. So this was the full paper. Thank you very much.